there will always be concern and challenge. I think a lot of people would agree with me that we're not moving fast enough as a society to address the challenge of climate change. But I do also believe that this is a system-wide challenge, an economy-wide challenge. And it's not about the supply of energy, it's about the demand of energy. I think what we are doing today is setting out a vision how we as a company are going to make a contribution to solving that challenge in a very purposeful and a very profitable way. And it's going to be very much on indeed how we are going to reform the demand of energy to cleaner energy that customers need and want.
For viewers who are investors, shareholders, or they call themselves stakeholders in many cases now, there will be differentiation in this statement between what Patrick's doing at Total and between what Beurden is doing over at BP. Where do you think the key points of differentiation are for Shell that make Shell an attractive proposition?
Well, I think it's a number of ways. We are going to, first of all, set out a very disciplined approach. You will be able to see that later in the day. But I think one of the key differentiators is that if you look at how our companies have succeeded so far, it was all very much by having very advantaged positions to produce a commodity. So the ones with the best rock, the best steel, the best concrete, producing energy into a commodity market were the winners. And we were very good at that game as well. But the future of energy is going to be much more playing it close up to the customers. I believe the future success models are going to be providing customers who need to go to net zero themselves with the solutions and the products and the convenience that they need. And I think that is where we have a differentiated approach. We have a position when it comes to market-facing businesses that nobody in our industry has. As a matter of fact, what we have today is what many are aspiring to have in 10 years' time. And I think that's where you will see the differentiation in approach. So not volumetric targets, but value targets that we are setting, working from the customer back.
Ben, can I ask you, one of the challenges you have is to reduce net debt, which you have set out there as a very clear ambition. But at the same time, you're also trying to shift the portfolio into new forms of energy and also to reshape the side of the chemicals business. There are a lot of moving parts here. Can you achieve both the contraction of your debt burden and the additional spending required to take you into these new renewable spaces?
I think we can. If you look at how we have fared in the last year, which was, of course, a very, very difficult year, yes, of course, our cash flows came down. That came down with 20% compared to the year before. But with that, actually, we were the least affected in our peer group. The next one had cash flows coming down with 40%. So, but it's undoubtedly true that, of course, we are a little bit constrained by the macroeconomic circumstances we find ourselves in. But even so, we find ourselves in a position where we can reduce debt, where we can spend significant amounts of money, percentage-wise certainly, on the future of energy, and where indeed, if we come to the point of $65 billion of net debt, which we consider a good waypoint in terms of balance sheet strengthening, we can do a number of things. First of all, increase our shareholder distributions, 20 to 30% of that cash flow, but at the same time also accelerate a little bit the spending that we have, and we will predominantly accelerate the spending in these future of energy spaces, at the same time also continuing to strengthen the balance sheet. So we will have, I think, a good run all the way up to $65 billion, but an accelerated process thereafter. That is the reality of the day, but we nevertheless, I think, made the right choices in balancing the spend patterns.